Hey guys, good morning, welcome to another live session of Stocksnipertrading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Trading with a perfect broker is the key, which takes you one step ahead. At AAAFx, we have you covered. The future of Forex is zero commission. Here at AAAFx, we offer ultra-low commission, which starts at 99 cents per lot. Our accounts spreads start from 0.0 pips. With account leverage up to 500x, and can have a minimum deposit of $100, with an additional 100% deposit bonus, regulated by HCMC Greece, compliant with ESMA. EU, regulated with FSCA, South Africa. Nothing to lose, but something to gain. Trade with the world's most liquid market provider, AFX, recommended by Stocksnipertrading. To get started, use the affiliate link below.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stocksnipertrading, we have a recommended broker, that is, HankoTrade. With spreads as low as 0 pips and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.
Hey guys, good morning, welcome. Thanks for joining. Everybody on Zoom, welcome. Thanks for joining, guys. Everybody on YouTube, it's a bonus session, bonus London session. That's why I said on YouTube, always hit your notifications bell, just in case, because you never know when we're going to pop up. So today wasn't scheduled on YouTube for London, but this is a bonus London session. Dave won't be back for today for New York, and unfortunately, I can't stream New York because I have a doctor's appointment with my doctor that I got to take her during the New York hours. So we thought maybe we'll have YouTube join us for London. So thank you guys for everybody for joining. If you're on YouTube, hit that like, subscribe, and also the notifications button. So you guys got the notification and you guys can join us. So that's why we always tell you to do that. Now, guys, we're gonna get started. It is London market open right now. It just opened up a couple minutes ago. What I traditionally do is I go over the top down with US 30. We're going to do the German stock market. We're going to do DAX. We're going to look at gold and oil. And if we have time, we'll look at GJ as well from yesterday's chart. So I can see right now, like DAX is flying a big bullish candle right now. US 30 is a little bit choppy. So like I always tell everyone in Zoom, if you guys are in any trades, just please be careful when you're trading right now, because I'm going to be doing a top down. So if you guys are in any trades, please monitor them. And then I start to trade like after 4 a.m. and we're going to go just after 5 a.m. Okay. Let's just go over any news that we might have in our session in London. So there was some AUD red folders that already came out at 12:30 a.m. Eastern. We will be trading over here. So there is some Spanish unemployment change right now that just came out. The figures were just released. We don't have anything throughout London until about 5 a.m. PPI manufacturing in Europe. 5:15, there's some British Parliament member is speaking, and then we have in New York session, we have Jolt's job openings, and we have NFP on Friday. So we don't have too much news in our London, and there is one red folder in 10 a.m. if you are trading, and then later on throughout the day, there is some NZD red folders later on 10 p.m. But we don't have too much going on in London, so let's get started with a top down. I'm going to get started with US 30. Okay, look at the big rejection. London just opened up a big green candle and it got rejected, and we're coming right back down. Okay, so if you guys are in any trades, just please, like I always say, monitor them. We're going to get started with a full top down analysis. Okay, so I hope everyone had a good day yesterday trading, and I hope everyone can continue going into Tuesday. And a heads up, Friday is NFP. It is Good Friday. The U.S. banks are still open. We will be streaming. I will be streaming New York with you guys for NFP. And then Dave will also be back for Easter Monday, but Dave will be back tomorrow, and then we're back to the regular scheduled program. He was expecting to be back this morning, but he ran a little late. So tomorrow, okay. But let's just look at the charts now. So on the daily, we have this daily uptick. 4 strong days are all making higher highs and higher lows. Yesterday was a big bullish day. Remember these levels I was telling you to watch where we came up to? We came exactly, look at where we closed, right at this point. So today, here's our candle. It's just opening right now. Very small volume, this red candle. If we continue to the upside today, we might break out of here and then start to come up to this level, 33,800, and test here. And then maybe 50% of this big bearish candle to the left. On Thursday, February 16, we have 33,900. Quite possibly it might push up to 34,000. That is a big target. We might maybe cool off today. Maybe the market starts to retrace back down a little bit. We come back, test 50% of this candle yesterday, maybe down to the bottom, and we'll see what happens. But currently right now, let's look at our daily candle. Remember what we do? We look at our highs and lows to get started. So I use a purple line for my high and my low. So London's high is our high of the day right up here. We just maybe came and tapped it and then maybe got pulled down just a little bit. So our high today is about 33,580 and our low of the day is around 33,512. So not much range, not a lot of volume in it, and that's basically our high and low. If we start to pull back, maybe we're going to come down and target the close of yesterday. So what I like to do there at the body is place a yellow line just to give me a heads up. Just in case we retrace back down to the yellow line, we should have maybe a little bit of some trading volume going on at the close, and then if we break it, then maybe we're going to come back and test our low of the day. So our close from yesterday is 33,500 for 540. If we continue to the upside, see where we're coming right up to, pretty much the high, just breaking March 6th high. So above us, when we look to the left of the chart, what do we have above us? We have these levels that we need to maybe identify in the market. We did this yesterday, but you can see maybe the volume might get up there today to this level. This would be one target, 614. I've got a couple wicks touching right there. And if we continue to go to the upside, maybe coming up to here, 665, this level, we got a body, a wick. We've got a lot of wicks reacting at this yellow line, and then we have a body right over here. If we continue to the upside, we're looking for the top of this body, 33,700. Then there's a little gap in the market, and then maybe if we continue to the upside, we're looking at the top of this wick, 33,740, and then this is the big target, 33,800 level. Like if we can get up to here, and then if we cut this big candle in half, like this big body red candle that started this bearish momentum, where is about approximately half of it? Maybe like around this level, that's about half of it. You can see 33,940, and then we're getting close to 34,000. But this level, there is those 2 wicks that rejected the market right there. So what I like to do is a red box, just in case we come up there today or tomorrow or this week, that we could be coming up to an area where in the past, when we really broke down here, the pullback came back up into this level and it really dropped the market. And since then, we've never really came back up there to test it. So maybe with this momentum, if we continue to come up here, maybe it gets rejected there, okay? Also, what happens today if we don't even get up there, okay? So what happens if we just continue, maybe that's today's high, and we come down with this red volume. We're going to test this yellow line that we just put now, and maybe we come back to our low of the day and we break. Then if we start to push down, where are some possible levels that we could come down to? Maybe right here, where these bodies are right here. Also these 2 wicks, like here in the market, 33,480. This is somewhere where we might come very early into London, maybe test this yellow line, then come down, back down to here. Here's another good big level, 33,350. The reason why I say a big level here is because here you've got a body, here you have a body, here you have a wick. So there's a lot of data at this critical area, a lot of open, closed candles, retests, and then if we continue to come down, now we're coming down red, we're coming down here, we're engulfing a little bit of yesterday's big green candle, and maybe when we come down here, here's the low of the day yesterday. So what I like to place there is, I can see those wicks to the left of the chart. There's two of them right there where it got rejected the market. So if I bring this across like a green box, just to give me a heads up, if it comes down here, that maybe this is going to be where the market bounces and goes back up. Okay, so that's how it looks on the daily. Now just an overall look at the market. This is when we had all that barcoding, when all of the bank crisis was going on in the US, and then finally we broke out of here and we had a bullish week. So last week Wednesday was a bullish continuation, midweek continuation, Wednesday, Thursday, here's Friday, the close, and then yesterday was that big bullish candle still coming up. Let's take a look at RSI on the daily. We're still nowhere near 70, so there is still some upside momentum that could come up and test this big supply box up here, but maybe we get a little bit of a pullback today. Maybe there is a little bit of a pullback. So let's look on the 1 hour, 60-minute candles, how everything looks. Okay, so the hourly candles are pushing strong, higher high, consolidation, sideways, bullish flag, continuing to break out of here. This was yesterday in New York. We had the big green candle at 9 a.m. 10 a.m. came right back down. We ended the call here, but then later on in the afternoon it continued to push up. And then Asian market, this is where we started to get some sideways consolidation, and this is how we're trading in this range right now. It still could be a bullish flag, but on the 1 hour there is a little bit of maybe some divergence coming down. So we are getting the bearish candle now coming from London. So let's take a look at maybe where we could potentially push down to. Our low of the day is the purple line. You can see a lot of resistance up here. Every time we're getting up to the purple line, rejected, rejected, rejected. We came up there for London right now and got rejected. So we have an hourly resistance up here. So let's take a look at a cleaner look on the 5 minutes and maybe start to get an overall picture. So you see the 5-minute candles, every time we're coming up to this purple line, see how we're kind of getting rejected. Look at London now pushing down. You guys, if you guys are in sells right now on US 30, see the big rejection where it came up green right when we started the call, and then it got rejected like a pin bar candle, and then there's the retest and pushing down. This is where you could have possibly sold the market, like right here. Place your stop loss maybe at the high, and now you're running it right back down. Next low could reach is right here. Okay, our last 5-minute pivot. So I'm just getting ready this chart. Okay, so here I'm going to draw like a red box going across. If we ever come back up here later on today or this session, it might be a double top. It might come back down. Okay, so this is one leg coming up, one leg coming down. Maybe it's going to find a neckline right here or here at the yellow daily. Remember this yellow line we put at 540? This is a critical level. And see the 5-minute candles, how here it just impulsively broke but hugged the yellow line, and we don't have anything really closing below until we got it here at 145. There was a little pullback, and that's our most recent low right here. So what I like to do too, when I find a most recent low and then I see our purple daily low, let's draw like a green box right here to show us that this could be maybe where the market bounces, comes back up. If you're in a sell, maybe monitor what happens here. If we actually break below this level and we continue to close below and push, we might push down to this daily and maybe to the next daily level. Okay, if we get any buys above here or looking for buys, we want to get above London's high and close above here, and maybe we can move up to the next daily level. Okay, so what we're going to do here inside here is I'm going to let it consolidate in here, and I'll revisit this in a little bit, because we're just going to move over to our next chart. So just watch these levels if you guys are trading. This was a good sell to take in London when it came up here and got rejected. Could have sold these two candles for a few pips coming down. But also, if you're going to continue to sell, watch and see if red volume closes below this yellow line, this critical daily, maybe a pullback and continue to come down into this box, and judge what happens in here. Okay, so I'm just going to move over, and we have in 1 minute a new 15-minute candle. Okay, it's going to be 3:15 a.m. Eastern, so we're going to get a new 15-minute candle opening in 10 seconds. So if you are in anything, just please be aware that we have a new 15-minute candle. Okay, so I'm going to move over, guys. For London, what we do, normally for New York, we do US 30 and NASDAQ, but for London, we replace NASDAQ with the German 30, German 40, DAX, whatever it is with your broker. This is the German stock market, okay? So we like the way how this moves in the London session, so that's why we add it to our charts that we trade in London. Okay, so again, let's look at the daily. This is DAX, German 30, German 40. It might be with your broker, or DAX, DAX. Okay, so we see that we have pretty similar, almost similar to what US 30 did. Wednesday of last week, we had this big bullish candle. We have these 3 days where it was bullish, and then you start to see yesterday was very, very consolidated, like inside this range. You can see above us, above here, daily resistance is all around here, right over here. And over here, continuing to get rejected. So we're still holding resistance at this point on the daily. Yesterday was like an inside bar, like a doji candle, indecision. Today we came back up and maybe pushed down. So maybe if we retrace, we got some momentum to come down and cool off the market. If we start to break out of here, we might be breaking out for a new, look at like a monthly high, weekly high up here. This is a lot of resistance for DAX up here, and we'll see if we can start to break above it. So again, let's just go through what we do. Our high of the day for DAX is a purple line right here. Our low of the day, okay, is right here. And then we get today's range so far in the market. And then you can see to the left of the chart, above the purple line, okay, if we break out, there's an impulse right up to there. We could touch that wick right up here. I'm going to place a yellow line just to show us that there could be an impulse break up to that yellow line. And then above that yellow line, I have nothing. So what I have to do is I got to look all the way to the left of the chart, coming over here back to January of when we started this year, January of 2022. We're going back. We're going all the way to last year at this time. So January, if we break out of here in January, now I see that there's some wicks over here. I'm coming December of 2021, coming back into October, back into September. So you can see this is like a monthly resistance for DAX. If we can get up here and start to penetrate these areas, maybe this week, next week, we could be coming up to close to, maybe pushing up close to 16,000. And these were all-time highs for DAX up here when we hit these over here. So we are at some critical levels. Maybe they're going to start to push this down. They're going to start to cool it off up here, because we're reaching a lot of supply up here. So if we get, that's upside momentum. If we start to get rejected and we break our low today, then where could we possibly move on DAX today? Continuing, if we go down bearish, then let's look, maybe we could come down to yesterday's low. Okay, that's maybe where we want to go to today, 15,550. And if we can't hold this support level from yesterday's low, maybe we'll come down to 15,500 level. And it's right over here, it's Friday's low. And you see how Friday's low lines up with a lot of action to the left. We have a wick rejected at that yellow line when we close below. Here's a body, here's a wick. Then we got rejection wicks and bodies. And then if we continue to push down, locate 50% of this green candle. But if we have some levels to the left of the chart where I can see, like right here, here there was a body, here there's a body, here there's a wick and some bodies. That's roughly around 50% of the green candle. Maybe we come down to 15,400, and then maybe we find a little bit of support down into this level. This is where we had some support over here in the past, and then you can see it turned into a little bit of resistance right over here at the neckline. Then we actually closed above it on the daily, and then we retested this green box, and that's where we had that big bullish move above here. So maybe just identify a demand zone. Also above us, what we didn't identify, what I'd like to identify now is a supply zone over here. So we can have a red box above us, just giving us a heads up if we're coming up here. And then also if we're trading in between, I didn't do this, in between our purple and our purple, high and low today, how we did with US 30, we found the critical level right in the middle. What happens if our critical level is like right here, where we've got the body and a body right now? Okay, so that's DAX on the daily. Let's look at how it's moving on the hourly. Okay, this is how it's moving currently in the hourly. Yesterday, London, we had to push down. We picked up volume in Wall Street. We came right back up, and then we closed. Here's the gap down. Asian session consolidation, and look at the big move. This London, when we just opened up right now, that big green candle came up there and now pushing down. Okay, so big rejection. We're gonna look to see if we can continue to break our low and push down to here, and see if we can continue to push down with bearish momentum. So let's look on the 5 minutes. Okay, so DAX is very choppy. So you can see this is where the market kind of opened up, gap down, some sideways trading action in the Asian channel, and then we came up, consolidated. So right now you see that where the volume really opened up, it was London right here, 3 a.m. So came up all the way up there, big rejection, and then pushed all the way down. So we are closing now currently below that daily yellow line, and we're retesting it. So just some critical levels just to identify on the 5 minutes. There's a body, okay, right there. If I'm looking to see where the market kind of got rejected and the volume is staying below, it's below this level right here. Sometimes if it comes up and closes above here, we could fill London's wick where we opened and test for that high. If that's something that you're looking for, you could look for a potential buy if volume closes above this red box, maybe to come up to test London's high in the high of the day and then come up to the bigger hourly supply if it comes back above there. What we're also looking for to maybe continue to short this thing is below this pivot, and then there's our daily support level, like how it was for US 30. So if we hold in here, because sometimes when it breaks, it'll just come down, maybe tap that purple line, or just an impulse break and then come back, close above, and then it might be a buy above here. So that's why we're opening it, so we don't get caught maybe with like an impulse trade. So if the volume later this session or today later closes below here, and then we retest this red, and then we flip this box to red, and then we push down, then we know we're below our low of the day, and then we might push down to the next daily low coming down to here. It might trade choppy now inside here and consolidate. So if that's the case, if we're not in a trade, let's let it consolidate in here, and we'll come back once a lot of this volume starts to settle down a little bit. Okay, so guys, that is our analysis for our indices right now. I'll give you guys in the Zoom these charts in 1 second. We have US 30 that's still pushing down. So let's see, maybe it's going to be like a double bottom where it came down here, back up, coming down. We'll see if it comes back up. Okay, we'll see. And also, guys, look for maybe a possible fake out to the low. If it comes down red, comes down in here, it could bounce with a wick and come back up into here and maybe shoot up back up to this level. Okay, so if we're looking to continue to sell the market, what we are looking for, well, what I'm looking for to continue to sell is a break of this structure, but also a candle that will close and retest this and stay below here, and then maybe we push down, just so we can confirm that it's not a fake out, guys. Okay, gold, I'm getting to gold in 1 second. I'll be there. I'm just going to give you guys these charts. If gold is moving, oil is moving, guys, just please, can you monitor the trades yourself until I get there? Okay, I know London, there's a lot of volume at the moment, but I'll get there, guys. Okay, I wish I could wake up earlier, but 2:30 is early enough for me. Like, I go to sleep like at midnight, so I don't really sleep. It's called a nap. I take a little nap and then get right back up. But I know it sucks, this timing, but it also sucks for me, this part of the world, getting up to do London. So, guys, in the Zoom, there should be a trading view link I provided for you guys, so you guys have the indices. Okay, we'll get to gold and oil. Oh, gold is just consolidating right here. I thought gold was breaking out, doing something. Maybe oil, maybe you made a mistake. Oil is moving right now, okay? So let's do gold and oil. Gold is, to me, it looks like it's just flagging right now, but let's break it down, okay? We had this big bullish candle that opened at 230 coming back up. Now it's just getting real choppy inside here. So gold is not the greatest right now, but let's break it down with a top down. Okay. Thank you, Svetlana. Thank you for joining. Guys, thank you for everyone. 160 viewers. I know it's unexpected on YouTube, and you guys are up at these hours too. So thank you guys. Appreciate you guys as well. That's why I always say, guys, please hit the notification button because you never know when we're going to join in. So always hit the notification button. Okay, so let's take a look now. This is gold, okay? Gold has had a big move since we hit 1800 down here. Nice big bullish move. If you guys are aware with everything going on around the world, gold is a safe haven for investors, for traders. When there's uncertainty around the world, when there's a decrease in the US dollar, anything that's going on, that it's a safe play here. So we might be approaching again 2000, or we might be testing up there, but we've been barcoding since we came up to 2000, 2010 we got rejected. These two tweezer tops around 2003 we got rejected, and then it's just been consolidating. Yesterday's low kind of hit that 1950 area, that psychological support level at 1950, and you can see we're barcoding red, green, red, green, red, green. There is slight daily divergence, bearish divergence, but we haven't really broke down. Same with yesterday when we were doing that New York call. It was bearish divergence, but nothing broke down. There was that one fake out that we never took the sell, and then it was continued buys after that. So be careful when you're trading gold. It's very erratic. It's very tough for beginner traders to learn how to trade gold. If you're new or a beginner, I would recommend personally stay away from gold. Stick with Forex pairs if you're a beginner. Stick with GBP USD, Euro USD, GJ, things like that before you come over to gold or oil or indices, because these are a little bit more volatile. They whipsaw more. They can get you frustrated as a trader, even as an experienced trader. Gold can really test you, test your patience. I'm sure some of you guys already know that when you're trading this thing, but just always be careful trading gold or oil. Okay. A lot of fake outs. JVD, I agree with you. A lot of fake outs. So today's high on gold is 1985. Our low is 1977. So if we just do the math, that's about a $8 move. That's about 80 pip range that we have inside the volume right now. But you see here, okay, the bodies right at this level. So let's place a yellow line at these two bodies. And you can see where we just touched down, 1980 is going to be a factor. Okay, so we have our high, low, we have our critical body right here. If we continue to move up bullish today, so if we come back to our high 1985 and we start to break out, remember scalping the markets. Okay, 1991 is yesterday's high, but we also have like these bodies right over here. So if we're looking for like 30 pip moves as a scalper, we could be moving up to 1988 before 1991. Then again, these two bodies are 1993-94 level, and then above us we have our tweezer wicks up here. So what I like to do with those tweezer wicks and our previous high is draw like a red box up here, just so we know if we come back up here, this is where the market could potentially get shorted down again. If there's a lot of offers up here, they're showing us when it came up here to 2010, it rejected. Came up 2 times to 2003 area and they rejected it 2 times. So maybe we come up again and they rejected it hard again. Okay, so we have to be aware. And then from the red box to this yellow line, look to the left of the chart, and I'm sure you're going to find a area right there. See that wick? There's 2 wicks right there. 1998. So before it gets up to 2000, you can see resistance to the left of the chart, and then there's the big red box. If we bring it across, you can see how it lines up with that wick. And then if you're looking above, if we continue to break above 2010, where could we move? Again, look to the left of the chart and you have your targets right over here. 2016. If we continue to push, we're looking up here, 2030. There is a little congestion inside there. And then if you guys remember, these are our all-time highs of gold. We got up here in July of 2020. We got rejected up 2075 up there. Then we got rejected again in early spring of 2022. So that is our all-time high of gold, and you can see it's a double top. coming up, back down, coming up, back down. So these are our levels for gold. I love watching gold on a higher time frame, guys. I love buying like physical gold when it drops. I love investing in gold. I've been buying physical gold since I was like 18, 19 years old. So I'm really passionate about investing and trading gold. It's a love-hate relationship we have with scalping gold. I'm sure some of you guys have that too. You guys probably tell yourself, I'm not gonna trade gold, but we continue to come and trade gold always. Okay, it's that love-hate relationship. But if you're patient with it and you're disciplined with it, you can do really well as a trader with gold. But if you're falling for the fake out moves, it can get you. Okay, that's why. Just if there's not a trade, try and wait for, be disciplined and wait for it. Okay, so if we come back to our low of the day today, 1975, and kind of we don't hold this 1976 area, then if we break, maybe we're going to push down to 1968, 69. See the bodies at this level, and then we have 1964. So these are levels, guys. So if you're on the lower time frames, maybe if we start to fill these zones, you grab your pips. And then over here, you see the bodies here at 1956. Okay, like right here, and then coming down to the 1950 level, right around here. See the big demand where there is? Every time the market comes down to this level, it's this psychological 1950, comes down, back up, comes down, back up, comes down, hits this, back up. Came down yesterday, all the way down to 1950 and all the way back up. So maybe the market will come back down, test this green box again, and continue to go back up. If we can break this green box, then we're maybe going to push down to 1940. Okay, right over here, these bodies. Okay, so that's good enough for gold. Right now it's barcoding green, red, green on the daily. Today we opened up and we're coming back down. So let's see on the hourly how it looks. On the 5 minutes, it was really choppy when we just came over here. Look at the hourly candles, okay, currently. Okay, so this is when we came down Friday. We came down all the way down here. Sunday, we came into here in 1950. This is where we built up all that momentum. London yesterday, big push coming through here. Then we came into New York right here 9 a.m., 10 a.m., another big push. Then these tweezer highs at 1991, we got rejected. This is where we closed Asian session kind of sideways, and then coming over here the market dropped, and then we got red, green, red, green, red leading into London. London had this hourly bullish candle, and then pre-London, and in London we're coming right back down. So we're barcoding right now. That's what this is called, where we get red, green in this consolidated area. Gold is accumulating. Okay, it's accumulating. Eventually they're going to redistribute this volume. It's been accumulating for 1, 2, 3, 4, 5, 6, almost 7 hours now. So gold will eventually get redistributed when possibly the New York session. And guys, don't forget that Friday is NFP. It's the only folders we have on Friday is 3 critical red folders at 8:30 a.m. So it could be accumulating for NFP. US unemployment numbers, that could move gold. We might maybe come all the way back down, test 1950, or we could be breaking up to 1990 and continuing to try and maybe grab 2000. Okay, to me it looks like it's building a neckline on the hourly. We came up here, that's where we got rejected, coming back down. See the neckline, this consolidated area? So if we come back up, maybe we get a double top on the hourly, maybe around here, this level. Maybe there's going to be a double top up there on the hourly when we get up there. Remember, that's an hourly analysis. And right now, we're holding hourly support right down here. This is where we're building current neckline. Okay, so let's draw a green box there. And let's go to the 5 minutes. Okay, let's check out the 5 minutes, how everything is going. Markets are, a lot of banks are, I'll show you Forex Factory later for Good Friday and for Easter Monday, but a lot of banks will be closed for Monday, a lot of banks. Okay, look at the 5 minutes, okay? So now we see the hourly resistance up here around 1982. See where we're getting rejected? Even if you look to the left of the chart, we got rejected there. Bring this box across. You see how we're getting rejected right there on gold? Okay, so let's draw a red box up there. If gold comes above and we trade above 1982 and we close above there and we retest it, maybe gold will be bullish above here, guys. And maybe we take it to our high of the day, the purple, 1985. Currently, we're getting rejected. So where could we come down to? Maybe we test 50% of this big bullish candle that started this big bullish move at 2:35 a.m. Eastern. Okay, so maybe it will come down to this red line and go back up. If we're looking to sell gold, I want to see a break of this critical structure. We touched here, it went back up. We touched here, back up. Touched here, back up. We kind of 230, we broke kind of like a fake out, and then they grabbed the liquidity and came back up. So if gold closes below 1977, 1976 area, this is where we could possibly look to short gold for a possible move to come down to our next daily is all the way down to 1969. But for scalpers, when you look for some pivots, like right over here, see where the market dumped down and then came back up, 1973. If you and I are measuring this move from here down to the red line, that's approximately almost 3740 pips. If it breaks that red line, it might come down to the daily, and that's approximately a 80 pip move. Okay, but maybe we take it down to this red line. If it gets down there, maybe it comes back down to this green box and we buy this green box. We place our stop loss below here, and then we're shooting back up here. Maybe we're going to get some consolidation. Maybe it's going to be choppy right now. This is not ideal for trading, like right now, this flagging pattern, this red, green, but now it actually broke below here. We're going to look to see now if it can retest the daily yellow line. See, this is the first candle that actually broke below. Now we assume this candle is going to come back up green to test this yellow 1980. So what I like to do now is right here, since we're below it, I draw like momentarily a red box, and I see if it can come back up. No, it got rejected. So you can still stay in your sell positions, guys, if you're in sells right now, because you see it breaking down. Every time we come up here, it's getting rejected with the wicks. Now you have an ignited bearish candle opening at 3:30. Okay, this is the 30-minute candle opening, close below. We assume it's going to come back up. It didn't. It came, it broke the wick, and then continued for its lower low push. Okay, and remember what I said, identify maybe 50% of this green candle. We'll see what type of reaction it has at this red line. Maybe it catches a wick and comes back up. But for buys now, if you want to trade inside here, if the volume closes above here, might have momentum to come back up and test this red box. I measure the move. If I'm going to take that buy up to the red box, it's approximately 12, 13, up to 15 pips if you're going to take that scalp on the way up. Okay, but right now it's continuing to move down bearish. We broke 50% here. It might come all the way back down into this green box, guys. If you're selling gold, if you sold here or your previous candles, maybe have your stop loss above here or your stop loss like above this area, and you're running it down. So gold is currently bearish. I'll add EMAs too on the chart. 9 EMA, we're below the 9, and currently below the 200. So this could be forming a death cross coming soon where the 9 crosses the 200, but there could be a pullback. You know, sometimes it comes down and then it comes right back up to test this critical red box area or the daily. Maybe it tests these moving averages and continues to push down. But if you're scalping and that's a nice little move for you, not bad move. Okay, so let's do oil right now. I'll come back and we'll look at gold. Let's do oil. Oil is bullish right now, okay? So we can see currently on the 5 minutes, it's bullish. This big candle started at 315, okay? Remember, 15-minute candles, 30-minute candles, hourly are your new momentum candles, your new volatility in the market. We're continuing to push highs. Retracement coming down, red, holding, continuing to break up. So if you're in buys on oil, it's looking good to continue. But where can it go? I just have a black chart now. So let's do our top down. Let's look at how oil is moving on the daily. Remember the big gap in the market, okay? So over the weekend, OPEC cut production for oil, so that increases demand, a simple supply and demand. This is where we closed on Friday. Over the weekend, there was an announcement that OPEC cut production, so that's going to increase the demand. That's why we opened with a $7 gap on oil, like over here at $82. And yesterday we retraced down. Our low of yesterday was $79 and we came back up, and here's our bullish ignited candle. side by side, and we're continuing to test yesterday's highs. So we still have this gap. Maybe we're not going to come fill it today, tomorrow, or next week. Maybe we don't even fill this for a couple weeks. Maybe oil is going to continue to be bullish depending what they do with production. Okay, and look it over to the left of the chart. This $82, $83 is a monthly supply area. We have not broke over here since November 18 of 2022. We haven't broke since early December 2022. We tested it early January, February of 2023, and we have not really broke this area. So when you look to the left of the chart, here it got rejected. Here it got rejected. So if we draw like a red box right there, 82.50 to 83.50 is a big supply area in the market. Okay. So you guys have this gap on your chart. Most of you guys should see this gap. This was Friday's close and then how it opened on Sunday. Okay. But let's look at today's high. Okay, so today's high is right here. We're right at our high. That's why it's pushing right now. A nice bullish move in London. We also have our low of the day. It's just a beautiful continuation. Close, open, bullish ignited candle, just like as if this was a 5-minute bullish ignited candle. We had absolutely no pullback to the downside. Just opened very bullish and continued to test yesterday's high. If we can break out, maybe we'll test. See all of the wicks right here, here, here. The first move could be testing the red box. Okay, I'm going to place a yellow line just so you know it's a daily area. And if we break out of here, okay, our next move could be at the top of the box right here. This yellow, and then above the yellow, where could we go? Well, let's look at our highs coming back in November of 2022. Last time oil was above these levels. Maybe we test $84.75, like right over here. Maybe we get it up to $86 coming up there. But maybe it comes up here and gets rejected and we come back down. Okay, so today, now, see the volume? All I have is the purple, and it's this big green candle. If I look to the left of the chart, I can get some levels as well right over here. So the reason why I'm choosing this area is because I have a body-to-body continuation, and if I'm eyeballing the purple high and the purple low, that's approximately 50% of the green candle. So if we rotate down, we come down, maybe we're going to test $80.80 down here. If we can't hold this yellow line, it might come back down, test our low where we opened, and if we cannot hold there, then we're going to start to come down yesterday's bearish candle, the wick, but there's levels that we go down. We might come down to this level, come down here, stop at $79.90 and go back up. If we can't hold here, then we might come down and test yesterday's low of $79. Okay, but right now I don't need to continue to look for bear side because it's bullish right now. We're right up here. So what we need to focus on is if we break the high, where could we come up to? $80, sorry, right up here, $81.75 over here. Here I have a body at this level. We might come up green and test up there. So let's look at how it looks on the hourly. Okay, so you can see how it looks on the hourly. This is where we closed on Friday, 4 p.m. Eastern, weekend, and then look at where they gapped up the market. So this was yesterday. We pulled back all the way down into here, and it went right back up. So currently, we have an hourly uptrend in the market. If we were to draw a trend line like this on oil, it's continuing to look bullish. Okay, every time we come down here, it's moving bullish. So I'm going to draw a white line as an hourly support line. See the gap in the market? Right now it's insignificant. We're not even coming near there. So the market is rotating up right now for oil. So we're testing where we kind of opened up the market on Sunday night, all the way up here. If we continue to move up, let's see how RSI is. There is a little bit of divergence, okay? But again, oil moves, gold moves, there could be divergence for a long time, and it can continue to move bullish. So what we need, if we're going to look to short sell, we need confirmation of structure breaking. So right now, let's look on the 5 minutes. Again, divergence on the 5 minutes. What I mean by that is when we came up here to this previous high and this high, see where we're getting rejected here and here. The market for oil at this point is moving higher. Okay, it made a higher high while the strength is remaining the same and going down. So that's divergence. So right now, if we want to trap the price of oil, we can kind of trap from the highs down into maybe like right here. We can trap like in a consolidated flag. So this is what I do, and then like above me I kind of put like a red hat up here, kind of like the supply zone, just to give me a heads up that that's supply at the daily high. If I'm looking to continue to buy oil, I want it to see if it can close above here and retest this, and maybe we continue to move up bullish. A good area maybe to look to short oil will be maybe the break of down here, and then we can possibly push down to the daily or to the trend line down in here, only if volume breaks this plane, this level, like right here. So I draw like a green box here to give me a heads up that maybe it might extend it to 50% of that green candle, okay, just so I don't get faked out of the market. And then what I do is I decrease my sell order down into here, okay? So I look for volume to close below here, retest this, then maybe the drop, because if not, it could just consolidate here in a flag and continue to move up bullish, okay? So that's for oil. Right now we're in that bullish flag. It's still continuing to, look, it came all the way red down here and coming all the way back up. Gold is coming right back up for maybe the retest and maybe that death cross. Okay, so see where I place that yellow line around 50% of that green candle. That's why I said if you're in a sell and it's coming down there, maybe look to take some profit out of the market, because it's possibly going to rotate right back up to this red box or the daily. So that's why I always locate 50% of big body candles. Same with oil. If we're in a sell and we're coming down here, where's 50% of the next big bullish candle? It's like right around here. And then if you look to the left of the chart, kind of lines up with a lot of these bodies. It might sell off, come down all the way down to here, $80.90, might go right back up, okay? So that's oil, guys, and gold. Let me just give you guys these charts. One moment, guys. Thanks for being patient with me. I know some of you guys are already trading, and that's great. I just hope you guys just practice proper risk management, okay? Yes, thank you, Crypt. Guys, if you can like the channel, thank you, guys. I do appreciate that. If you can like it, almost 200 viewers. I know it's unexpected. It's a bonus session we're doing with you guys. That's why I always say, please hit the notifications. Let's take a look at our indices. Okay, there it is. Okay, so you see where we came down? There was that fake break, and now we could be in buys. Now what I can do is I can lower my buy now. Maybe if we close above the daily yellow line, same with DAX, I can maybe bring my buy down to this level now. And then now we can maybe trap it inside here. This is like a zone where we watch to see if it's going to accumulate in here. We broke the plane, okay, so we broke the low. The sellers claimed a new low, but when it came down here, it was met with a lot of bids. That's why it got rejected and coming right back up. So it could be like a double bottom where I said it came down. Let's look if there's bullish divergence, a little bit of divergence. Okay, so more for a confirmed buy, I'm going to look for something above here. Also for DAX, it came all the way down to the green box. That's why if you were in a sell, maybe you could unload your position down there. And then now we'll see if it closes above here for a potential buy. If it comes back down here and closes below here, we can sell with the market, okay? No, unfortunately, there won't be a New York session later on. Dave, I was hoping to have Dave back today. He couldn't be back. I was going to do London and New York for you guys, both sessions, but my doctor called me. I got to take my daughter in around 8 a.m. Eastern, so I won't be able to do New York. So that's why you guys are joining us for London today, so we can continue to keep YouTube running 5 days. But Dave will be back tomorrow. Okay. Okay, so guys, also I wanted to show you, remember GJ, if you guys were trading with us yesterday, remember GJ, I have not changed my levels. So remember GJ, we were looking for a buy above here during New York. There was that double top, and then I said maybe let's look for a sell position below here, and it broke, and it continued to push all the way down to this daily. So that was that sell from yesterday. Now see the levels. So what we can do is just bring the levels across. So this is why I always say these are static zones. So you see that red supply area? If you brought it across, you see there it got rejected, and then now we got volume closing above it. See, now we're above the daily high, and now what I do with that red box is I flip it green. Okay, so I'm just using the same top down from yesterday. Okay, even this green box, I can bring it across now. That's demand. Okay, so we don't have to worry about anything below here now because we're all the way up here. Look at where it just filled. We were looking for a buy yesterday to the next daily, but we didn't get it yesterday. Why? Because the market rotated down to pick up more liquidity, and then it came back up, and then now you see London market, now it's breaking up to that next daily area. So it's kind of, if I brought this green box all the way over here and I got it ready for London, that same exact trade I was looking for yesterday for New York, it wasn't there. No volume closed above there. So, these are zones. Today, it came all the way and closed above now. Okay, so all the way in London market. Now we're breaking to the next daily high. So you could have sold the market yesterday, grabbed your pips on a sell on GJ, and then came back now, like if you're coming back for London, just extended that supply box all the way across. These are for guys, if you're trading GJ in the group. I know a lot of you guys are, because you guys always message me, Ron, can we do GJ? Same thing, or GU, or EU, or any security for that matter. See what I just did there? I kept all of my static levels from yesterday. I never touched the GJ chart when we closed the call. All I did was just extend it across to show you that these are static zones. And look at where we just came up to. We came all the way up and we just tapped that yellow line. You guys see, I didn't do a top-down analysis on this. This was all from yesterday. And that same arrow that I had from yesterday coming up there, that's what I had right over there. It's that same 50-point move. We just tapped it. We just kissed that yellow line, that daily, and now it got rejected. Okay, so guys, if you are trading these, you can use these same static levels. And then look at the zone above me. The next daily, if we continue to break out bullish today, our next daily is 166 up here. But right now, there is a little bit of resistance right here. So you can draw like a red box here now. And again, just go through your charting, okay, and then we'll see how far the pullback comes down to. If we close below this level, okay, down here, this is where we can potentially look to short the market. We could look to short it below this green box if it closes below here, and then maybe it will come back down to this green box. And if you're looking how many pips that could be, if we look for the short position today, to the red line, if you're scalping, that's about 12, 13 pips. But then if it comes all the way down here, you're looking about 33 to 35 pips down there. Okay, now GJ came up to the daily and got rejected. Okay, so guys, I'll give you guys this chart as well in the Zoom chat. But you see how quickly I just did that? I kept my analysis, and it's just tapping the levels precisely. Okay, so you don't always have to do a top down for every single security. I do these for you guys when we get on every single call, but I could just leave these as static levels. And you can continue to use them. So good job, guys. Like I see a lot of you guys are doing that too. You guys are using your same charts over and over and over. I understand that they get ugly when you have a lot of lines, but you can remove the lines that are not in use anymore and then just update it. That's what you can do. You don't need to do a top down every single day. I do it for you guys to help practice, and so we can also like analyze the markets. Right now, guys, gold. Okay, so see gold where I said maybe look to buy like above here. Now we're breaking back up, so it kind of dipped down. Here we go on gold. Oh my goodness. Okay, and also oil. Okay, let's watch oil to see if it can close below here. Okay, so here we go with gold. Okay, so it was kind of a dip down to 50% of this green candle, and we're coming all the way back up. Okay, now if you're not in a trade, what we got to do is we'll flip this box green, and we'll look for maybe a pullback on gold. Okay, so remember the hourly resistance, we're breaking right above it now. Look at gold go 1985. Okay, and we're getting close to 4 a.m. Okay, and oil is still inside here. We'll watch. Okay, but gold. That's why if you're in a sell, when we're scalping, that's why I look for targets. Okay, that's why I targeted 50% of that green candle, and that's where it kind of came down to, and then it reversed and came right back up. Let's also watch US 30 and DAX at these levels. Okay. So there is you guys are asking, do we wait for close of candles or impulse? So every single opportunity as a scalper, you're going to see a lot of impulse candles. Okay, so this is where with your intuition, if you like the setup and you go in on an impulse, you just have to know that an impulse candle can break, go up for a little bit, and then catch a wick and come right back down. So what I always recommend, if you're taking an impulse candle, go a little smaller, test it out. Then if you get that volume to close above and retest it, then that might be your opportunity to enter with a normal trading size, because now at least you have some more confirmation as opposed to just hopping in on just any candle that's going to break out. Because if you look at a lot of candles that broke out, like here, if you bought that buy, it came right back down. If you bought London market open, it came right back down. So no volume closed above that level. So if you were waiting patiently, you didn't get in a trade, you didn't get anything. But these impulse traders, if they didn't exit with a quick little 10 pip grab or 15 pip grab, when they measure the move, then you're in trouble. So that's why sometimes if I'm trading an impulse candle and it moves up 10, 15 pips, I get my money and I get out, because I have no idea what will happen up there. It might get rejected and come back down. So I use the pip and dip strategy. I try to get in when volume closes above with a retest. Then I have at least a little bit more confirmation than just an impulse candle. So do we have any volume closing above this daily? Not yet. So it just kind of impulse broke out, peaked its head, and then got rejected. And then we're getting ready to go into 4 a.m. in about 5 minutes. So maybe the market is going to shift in another direction. See now how it's opening red? Maybe we're still right inside this consolidated area. Okay. So, but it is forming like a double bottom where it came down here, back up, came down, slight break, but they grabbed that liquidity and it came right back up. But we're looking above here. Okay. Okay, let's just look at gold. Gold is giving, our possible retest. So see when it broke out now, see where it opened red. Let's see how it reacts. If it can come down here, maybe hold this zone, and maybe we can go into a buy on gold and continue to take it up. Oil is breaking right now, okay? So right now we have 4 more minutes to go into our hourly candle. So sometimes this is what happens. If we sell right now, it might drop a little bit, but then the new hourly candle might open green and come right back up. So this is where sometimes I use caution, just right before a 15-minute and a 30-minute or an hourly candle, because a lot of times when we get into a trade now, the hourly candle will open and will go opposite direction, and then we get caught. So it's a critical time. Some traders take the trade now, some wait. It just all depends on you, on your trading style. A lot of times when I take these trades like right now, I get caught on the hourly candle. So if I don't feel comfortable, the best thing to do is just wait. There's nothing wrong with waiting. Some traders need to learn patience. Okay, and DAX now is maybe going to break above this area, but maybe it breaks a little bit, maybe it comes back down at 4 a.m., we'll retest, and then maybe we get in at the 4 a.m. candle. So since we're 3 minutes away, I'm going to wait now. I'm going to wait till 4 a.m. opens to see the new hourly momentum. Everything looks like a nice little double bottom down here. Gold is retesting. So you see how it came up. This was the impulse candle that broke out of here, came all the way up here. So sometimes when I'm measuring the move, the impulse break, it shot up about 15 pips. Okay, so if you like 15 pips, you can get in and out of the market, because if you don't, it retraced down and came all the way back to your entry point. Mustafa, welcome, bro. It's good to have you too, bro. Hope everything is good. Okay, so oil is breaking down this level. Let's see if it can close below here. And if it does, what we do is we'll flip this as a red zone, and we'll get ready for the retest at 4 a.m. Did I move the green box on gold? No, I didn't touch any, I didn't touch the boxes. I just changed the color. I just changed it. Remember, it was red, and then I just flipped it green. I'm looking at the red candle coming down now in the green. Yep, it was the same zone. It was all red, red, red. And then as soon as this candle closed above, I just flipped it to the green color. Okay, so you see how if you go in on that impulse, like that's why I say, and look at too why I locate on the left of the chart. Okay, so if I was in that trade, do you see here these, like the structure? Look at structure. The previous double bottom where it came down here, bounced, came back down, see the red line, and then there it was resistance, and then you see that's exactly where we tapped, the red line. So you know when I'm measuring a move, so if I know if I'm taking that impulse candle and that imbalance fill, it's about 12 to 13 pips, okay? Not 20, not 30, not 40 pips. It's just a fill from here to the red line. So I do my math. 13 pips minus maybe 1.5 for a spread, I can maybe net 10 pips, but 10 pips, that's it on an impulse break. So 10. And then when I know that, if I go in, it's a pip and dip move because I have no idea how it's going to close up there. Okay. I know this style is different for most traders, but you got to understand if you're going to take that impulse move, you got to know the consequences, what can happen. Okay. Also, you got to have targets. Okay, it's not always just going to go up forever. Okay, it might just target one fill and then come right back down. Okay, so I'm not in a trade. Now I'm going to wait till 4 a.m. I'm going to see how it opens in the next 30 seconds. See the fake out right there on US 30 and DAX? See what I mean? If you bought that candle, it came up for a good 5-10 pips, but see the big rejection. No volume closed above. No volume closed above. Okay, so I'm waiting. Maybe it's going to be a sell candle. Maybe it rotates right back up, but we'll see at 4 a.m. Okay, so I saved myself some drawdown by not taking that initial impulse buy. Do you guys understand what I mean, guys in Zoom, when I'm telling you guys this? Sometimes if there's no trade, just wait it out. Okay, now we're opening up at 4 a.m. This is a new hourly candle. Okay, now it's opening bullish. Okay, so even DAX is coming right back up bullish, but it's only the first 20 seconds. Maybe it's going to come up and get rejected again. If you want to now scale down to like the 1 minute candles to watch, we can definitely go into the 1 minutes. We can watch this 1 minute candle that's going to close in 30 seconds. See, now I'm on the 1 minute candles. Okay, I'm looking for volume to close above here. I don't necessarily have to stay on that 5 minute candle. Now what I can do is I can break the 5 minute candle down into single 1 minute candles. This candle is going to close in 10 seconds now. This is the first 1 minute of 4 a.m. and our first 1 minute of the 5 minute candle. Okay, so volume is right at that, didn't close above. Now it might come down red a little bit. DAX 1 minute candle closed above, but now it's possibly going to retest. Let's see if DAX can hold in here. I don't normally trade 1 minute candles in London with you guys, but I want to show you that if you're still sitting on the 5 minute candle, you can come down to a lower time frame and watch the 1 minute candles. Okay, and maybe oil fake out. Let's take a look. Okay, so we're still waiting on those. Oil, yeah, guys, exactly. Thanks for pointing that out, Elder. See what I mean? If you take that red sell, it was nice right before 4 a.m., but then this is what I tell you. It could flip on us and come all the way back up. That's why I didn't take that trade. If I did, I would have measured the move. So I would have measured it from down here, maybe, yeah, it was a 10 pip drop. Normal fakeouts are approximately like 10 pips for most securities, but you see how they came down, they trapped those sellers, and at 4 a.m., they gap up the candle and they bring it right back up. Okay, so that's exactly what I was talking about. I'm happy you guys can see it live because it's when I backtest this, it's different when it's live, and you see how it all happened at 4 a.m., that new hourly candle. So hopefully you guys, Elder, that made my morning for you. You know, when you learn something new, that's what I'm happy about. Look at gold. Okay, so gold is holding. Guys, we can buy gold now. Okay, I'm going to go into a buy on gold. I like how it came down red. It's now holding this position. So I'm in a buy on gold. I'm going to see if it can break here, maybe come up to this level right over here, maybe test the high for about 17 pips if it can get up there. My stop loss will be like below this red box. Okay, so let me just like update this. Sorry. Okay, so I'm in a buy here. I'm going to place my stop like maybe below that red box, and then I'm looking for maybe it to come up and test the 1985 level, and we'll see what happens up there. If oil can come back and close below here, we'll look for something below here. Okay, so it came up, got rejected. Let's see if it can come back and close below here. I'm giving gold a little bit more room to breathe because this thing is erratic. It could come all the way back down into here. I'm not going a big lot size. I'm giving it room to breathe. I normally trade a little bit larger in New York with New York volume. I kind of tame it down in London. That's just me personally. See US 30, okay, so I'm waiting for volume to close up there. It came up 3 times, impulse, no volume close above. Even if we were to go to the 1 minute candles, we look at it on the ones. One came, red minute coming back down. We're right back in this consolidated area. DAX is the one that's holding. So sometimes when the markets are moving like this, they're choppy. Okay, so this is gold coming up, going back down, maybe come back down, go back up. That's why I trade a little smaller, okay, until I get a good feel of how the market is moving. Same with oil, it came down, back up, could be coming back down. So unfortunately, like London right now, it's a little bit choppy. But this is you as a trader, you need to identify how the markets are moving. And this is when you always ask, Ron, do you use a bigger lot size? Do you use a smaller lot size? Well, if the market is choppy like this, you want to stay with smaller lots until you get a good feel of the market. And then we start trending again. So like if gold can break out of here and we're starting to make higher highs and higher lows, then you can increase your lot size. But when we're trading sideways like this, a lot of this, trade smaller. When we're barcoding green, red, green, trade smaller until we get a feel of how the market is moving. Okay, so DAX is breaking out of here. So DAX is holding. US 30 still has not got up there yet. Okay, so oil, okay guys, oil could be setting up for a potential sell on oil. We came up at 4 a.m., got rejected, we closed, and now it's below this area again. Okay, so if it starts to really break down, maybe we can look for a potential sell on oil. Okay, just wait. I said a potential sell, and nothing confirmed yet. We don't have any volume kind of closing below. I'm still holding my buy on gold. I'm gonna give it this much room to breathe. We're still above the 9 EMA. We're above the 200, but gold is just sideways trading right now. So I'm giving it some room to breathe. But if I don't like the trade, you can close it. That's another thing I want to mention. Sometimes, guys, when you get into a trade and you're not liking it, you don't have to wait for the trade to come all the way down and hit your stop loss. If you don't like the way how it's going, you can reduce your risk by closing it early and then just looking for another better trade. So that's another thing. I see a lot of traders fail to do that. You know, they wait for it to hit the stop loss. I adjust my trades. Like if I don't like it, I'll close out the trade early and then I'll just take a smaller loss as opposed to letting it come and hit my stop loss all the way down and being stubborn about it. So that's like the maturity of a trader, is to learn when to get in, learn to get out. You don't need to let it hit your stop loss. Okay, learn when to hold them, learn when to fold them. It was a song by who? What was his name? Kenny Rogers? Hey, Scotty, you gotta know when to hold them, know when to fold them. Yeah, we should play it in the background. Is it Kenny Rogers? Kenny Rogers, right? Know when to hold them, know when to fold them. Okay, so you see how it's going against me right now, okay? So I can close this position right now, take a loss, but I don't need to let it come all the way down to my stop loss. Like I can get out of the trade right now. But I'm not in a big significant trade that I could still just test out the 9 EMA, see how it's going to hold here, because maybe gold just pulls back and goes right back up. So just watching these levels. Oil is too erratic right now, coming down, back up. So same with gold. Okay, so unfortunately we got caught in some consolidation right now. I hope London doesn't just trade like this. DAX is moving bullish. Do I want to buy DAX right now? Maybe I'll watch if US 30 can catch up. But DAX is breaking bullish, coming right back up. Let's see GJ. GJ is continuing to push up here. What we could do is look to maybe short GJ below here. Okay, it is getting a little overextended, but watch and see if GJ can close below 165.35 area, and maybe we can short it down below here, and then maybe if we can break this trend line that we got coming up here. It's a very parabolic trend line. Maybe it closes below here, retest, and then we get a nice little drop down here. So we'll watch GJ. I'm still holding gold, guys. Okay, so we got to hold like at least to the 9 EMA. Don't be scared of a pullback to the 9 EMA on any security. Okay, if you add the 9 EMA, if you're getting scared of a pullback to the 9 EMA, then I can tell you that you are trading very, very tight. So just don't panic if it comes down to the 9 EMA. That's traditionally where retests want to happen, is to the 9 EMA. Okay, I'm just adding all the EMAs to the charts. Okay, now we have US 30 getting above here. Maybe this candle is going to close above. Let's watch in the next 17 seconds how it closes. Okay, look at all our highs up here. These like 3 wicks. Okay, all those highs. 33,543. It's going to close now. Okay, so yes, we closed above. Let's see if we rotate down just a little bit. Okay, it's breaking out. I'm going to go into a buy on US 30 myself right now. Okay, so I'll adjust this again, okay, to show you. I'm going in a buy and stop loss. Maybe I want to be in the green box down in here. Okay, and then I'm looking to maybe take a profit all the way up to there, but maybe as a scalper, I'm looking for it maybe to come up to this area of resistance. And then how big of a move could this be for US 30? Possibly 16 pips up to the red line, and then if it can get up to the next zone, it's about 30 pips. Okay, so I'm in a buy on US 30. And we'll see if we can make a move similar to like how DAX got up there. Oil is continuing to break down bearish. Okay, so it came up, rejected, came up again, got rejected. Let's see it one more time. If it comes up and get rejected, you could possibly go into a sell on oil. Let's take a look at that GJ. So GJ is still moving above here. Let's watch GJ too, guys, if you're looking for a possible maybe break of structure and to close below 165.35 level, like right down here. Maybe we'll get a short potential down on there for GJ. Okay, I'm still holding my gold, okay, and I'm also in US 30 buy. Let's see if we can hold this trend line too. Okay, DAX moves a little bit better in London session. Okay, so DAX filled up the range up to here. Maybe we'll see if we can break out of here and continue for a new high. Okay, so gold coming back up, oil dropping. Okay, so gold is going up, oil is dropping. Did anybody take oil sells? Okay, I'm not in an oil sell, but we got rejection, volume closed below, and nice selling momentum. Anybody trading oil? Okay, and then so next daily is for oil is $80.79 right here. Okay, so gold is coming right back up. So we retested. Okay, we never broke this green box. We tested the 9 EMA, still holding. Now I'm back to like break even where I bought in. So now I'm looking to see with this momentum, gold came down, we picked up some liquidity. Can we break out of here and break out of the high now? But you know, these consolidated phases, sometimes they get annoying. It could come right back down and play around in here, but hopefully we can break out with this nice liquidity grab to the low. We got some volume we picked up. Now let's see if we can break out bullish out of here. Is 1985 my TP? 1985, yeah, it's kind of like where it's today's daily high of gold. So we want to see what type of reaction we get at 1985. Getting up from here to 1985 is about 17 pips. Maybe we can break out of there, get 20, but that is one target. It's our high of the day, so we have to target our high of the day and see what type of reaction we get up there. Because you can see every time we get up there, it got rejected there and there. If we do break a little bit higher than the high of the day, then this is where some 5-minute volume can come up to 1986, this red line right over here. But that would be, yeah, a target up there if we can get up there. We got to break out of here first. We're struggling to break out of 1983. Okay, I'm still in my US 30 buy. I'm still holding this thing. Okay, and it all depends how you want to scalp the markets. Okay, so like that that move right there is about 7 pips. Not ideal to be grabbing, okay, because a lot of us have maybe a 1 or 2 pip spread for US 30. So we're looking for a move up to the red line. At least make this trade worthwhile for about 15 pips up here. 16. We'll see if we can get up there. Okay, and gold is testing again. GJ, looking for something below here. Sorry guys, I keep flip-flopping the charts, but I'm trying to update all these at the same time. Okay, so gold, we got an ignited candle breaking the high. Okay, so let's hope now that this area over here, that we can start to build this as a demand area. So anytime if we pull back down into here, maybe we can pick up some bids in here. This level that used to be resistance, now you see how I turn it into demand. Okay, and we're looking to see if we can continue to move up. DAX, I didn't trade DAX, but it's also looking good as well. Okay, so I bought this, breaking out of here. So for me, it's up 10 pips right now. Okay, but I'm looking again for that move. Yeah, there we go. Okay, there's about approximately 15 pips, guys. Okay, so you can go to a break even now. But if it's too tight for you, even for break even, then just keep going. But that's normally like a target, what I have up to that red line. You know, when we're looking for 10 or 15 pips, but let's see if it can continue to push. It's a nice ignited candle. We popped, and let's see if we can get up there. You can go to a break even if you like, to reduce your risk. Remember, it's London volume. Sometimes in New York, we get a bigger, yeah, there we go. Okay, so there's the pop for US 30. Okay, guys. Please manage your own accounts. Okay, I'm trading a little bit different than you guys. Sometimes I trade with different lot sizing. So there's a nice little pop, guys. That could be approximately 20 pips. Here we go. Okay, there's 20 pips. Okay, so I'm up 20 pips right now. Make sure minimum you guys are at a break even. We're at 22, 23. Continue to collect, please, and watch your trade. We might come up to, you know, our full target of 30 pips that we kind of projected up to that next supply area. So should be up 25 pips right now, guys, depending on your spreads. But I have about a 1.2 pip spread. Okay, gold is fighting. If you don't like gold, guys, get rid of gold. Oh, no, gold is punching through. Gold is punching. Okay, guys, there we go. 30 pips. Perfect. I'm going to now close my trade up there. I'm going to try and take out 25 to 30 pips up there. And that's a good trade for me. Zero drawdown. Okay, remember we bought right here. We placed our stop loss. And now your stop loss, if you want, go to a break even like that. Reduce your risk. There we go. So we just filled that entire zone right up there. Beautiful. Good job, Elder. Yeah, so when I get up there, I don't get too greedy because I look to the left of the chart. It came up here, got rejected. London's high is right there, and it got big rejection. So maybe it's going to come up there and get rejected again. I don't get too greedy. That was normally I look for 10, 20 pips. That was 30. So that's beautiful. You know, like what else do we want as a scalper? You know, a trade with nice entry. We waited. Remember how long we waited for that? And then when we got in, minimal drawdown. Nice ignited candle, continued at 415. We got that 15 minutes. See, that's why I get out, guys. I don't get too greedy up there, because that's why I draw these red boxes. That's why I draw these supply areas. I'm not trying to make my charts look pretty. I actually obey these rules. Like when it comes up there, and I don't play the woulda, shoulda, coulda game. It came right up to there. I was targeting this red line at 15 pips, but it continued to move right up to there. It can continue to break out of here, and it doesn't matter to me. I have my mindset set that my target profit is right there, and I go with it. Sometimes, yes, I take out my profit too early, 30 pips, and then it runs 40, 50. But I don't play that game anymore in the markets, because it really affects your mindset. So I have like a set plan when I trade. Gold punched out of there, okay, and now it got rejected. This is gold. That's why, guys, I tell you, I love trading US 30 all day, every day, because it's less headaches. See how nice that move is? Gold, oh, it tests your patience. Gold can test your patience. Okay, so gold kind of punched out of here. It was a move for about 10 pips. Okay, if you didn't grab anything, I didn't. Okay, I was hoping for a bigger move, but I didn't take out. Now it got rejected heavy, so we're probably going to come back down and trade inside here again. We'll test this area, but what I can do now is kind of reduce my risk. Maybe I bring my stop loss up to here now to kind of reduce my risk on gold. I know Nikos gold can really make you frustrate you as a trader. I understand that. But this is gold. That's why I say, if you're a beginner, gold is not the security to get started trading with. I would recommend FX. Oh my goodness, here we go on the indices. Okay, see, did I make a mistake exiting too early? Maybe. Okay, maybe I did. But I know some of you guys are still holding, and now the move is 45 pips. Now, what you do is go through the motions again. Remember this big red box? Let's flip it green. Okay. Just because like I'm out of a trade doesn't mean I got to stop doing what I'm doing. Scotty, nice. You set your stop loss at 30 pips in profit, almost 50. Good, yeah. You look at DAX. It came right up to that red box and now getting rejected up there. So see how we just flipped this zone, red to green. Now we're retesting, coming back down. If it holds here, maybe we're going to continue to go up. But this thing just punched right out of there for 45 pips. Okay. Gold, okay, so gold, I know I'm still holding my gold. It's playing games, but it couldn't get out of there. Guys, if you don't like the gold setup and you're in some profit right now and you don't like it, you can close it, but I'm still holding this thing. But I reduce my risk. Okay, so my stop loss was down here. I kind of put my stop loss a little higher. Maybe if it gets tagged out, I don't want gold to come down here because I made some good profit on US 30. I don't want to give back to the market. Okay, this is another job as traders, is to protect our profit as traders. Okay, it's trying up there. Oil is continuing trying to break down. Let's take a look at that GJ. No, GJ is continuing to break out highs. Okay. See the retest? Okay, so we came down red right into the green box. Now we're coming right back up. So if it continues, we could get a bigger move on US 30, guys. Astro, you're in GJ buys? Nice. Yeah, no, GJ still looks bullish. It's getting a little bit overbought. Nice hammer candle on US 30. Okay, so it came down, right down to the red box. We flipped it green. So like right now, I can't show you guys Bookmap, but Bookmap collected some bids down in here and it's still holding, and now we're taking out some offers above us. So this is now running 50 pips, guys. If you guys are still holding, God bless. I hope you guys get this full move. You know, our next daily target is that next yellow line right there at 33,614. What happens if it fills all the way up there? Could be a 70 pip move. And that's kind of all you need in London. If you wake up for London and you grab that move, go back to sleep and go on with your day. You know, you don't got to sit in trade for hours and hours and hours. Come on, gold. Get this thing going. Nikos, I recommend you stay away from gold. It's just we're addicted to it. Every trader is whether you're a beginner, you're an experienced trader, or you've been, everyone is addicted to trading gold. I don't know why. I think it's just because it's gold. But I honestly hate it. It's a love-hate relationship. I only do gold for you guys. Like I'm never really trading gold by like when I'm trading alone, I'm on US 30. I'm on indices. Look at this beautiful move. Why would we not want to trade this? Like, look at these candles, guys. This is beautiful. I try and get you guys to look at indices, but everyone says, Ron, always look at gold, 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 gold. And then I tell you guys, okay, we can trade gold. I'm in a buy, and I'm losing my hair. I'm going bald to try and get 10 pips out of gold. Like you guys see how stressful it is, but we're addicted to trading gold. But we're neglecting a 50, 60, 70 pip monster right here on US 30 and DAX. This is all we need to trade is indices. No commissions too. Why do we want to make our broker rich? I took this trade. For every standard lot I take, I got to pay $4.50 to my broker. When I trade indices, I pay my broker nothing. So I keep more money. And now I'm going to close gold. I just don't like it, guys. I'm going to close it. I bought right here. I'm only in a few pips drawdown. I just don't like it. I'm talking myself out of gold. So I'm going to close it, guys. I'm out of this trade myself. Sorry. I just don't like it. I bought right here. So it's basically at a break even. I was up 10 pips, 5 pips. But I'm not going to stress out with it because it might come back down and then all of a sudden come down here. So I'm closing it. I closed that break even basically. So guys, if you still want to hold it, that's up to you. But I'm closing it at break even. I'm out of it. I just don't like it, guys. You guys kind of talked me out of it. See, this is why I love trading indices. Nice move like this, you could be done for the session. Gold moves better during New York, okay? And also, I think NFP is causing gold to really be very choppy because we have NFP on Friday. And if we look at Friday's news, it's only NFP. Like, did you guys do your research this week when you look at Friday? Let's see Friday over here. Yeah, look at Friday, okay? In the London session, we have Switzerland banks are closed. We have British banks are closed. European banks are closed. Canadian banks are closed. All we have is NFP, 830, okay? So you can see that that's all the market is possibly waiting for. And then Monday is Easter. So when we look at Easter on Monday, if you guys are going to trade on Monday, European session, again, Switzerland banks are closed, British banks are closed, European banks are closed, German banks are closed, Italian banks are closed, and then we come into New York. US banks are still open, but it's going to be very light volume. So we don't recommend you trade Easter Monday. We'll trade Friday for NFP, but maybe you guys take the break, take a day off on Easter Monday. Yeah, spend some time with the family. I think Dave might be doing a little back testing with you guys Monday morning, but not going to be a lot of trading going on. Yeah, guys, so I just don't like gold. Normally, guys, I don't like close trades while I'm in them, but I always tell the guys in the Zoom, a break-even trade is a good trade. I look at it as a positive, because if I was still holding, maybe I'm going to come down and lose 10, 20 pips. Break even is okay. I tested it out. It didn't give me the break I wanted. It went up for 5-10 pips. I was looking for a bigger move and it just kept getting rejected. So sometimes it shows maturity of a trader to close a trade early, guys. You don't have to wait for your stop loss to get tagged, because if you leave your stop loss there, the market makers can see it, and I can guarantee you they're going to come down and hunt for it, okay? But don't let them get your stop loss, okay? We test out the trade. it's not going in our way, close it. And then what we can do is we can look for another security, or we can look for another trade. I see a lot of traders get married to their trade, and they can't. Sometimes divorce your trade. Divorce it. Get rid of it. Like an ex-girlfriend. You don't need to stay committed to her. Get rid of her. Get rid of her early. Less headaches. Yeah, because the market makers, they know where your stops are, guys. Okay? And they will come and they'll hunt for them. So if you leave them there like a floating duck, they'll come down there and they'll find it. Okay, so I'm happy that happened live, guys. Okay, so when we trade live, it's also about education too. Okay, I know we all come in here to try and make some pips, but it's good to learn why I cut that trade. Okay, I hope you guys are learning something about that, because it took me a long time. It took me years to learn how to cut trades like that, because I was always holding it, thinking it would go to my target, and then it would always come and hit my stop loss. And now I've learned over time that that's not trading. That's just like hoping and praying. Trading is manipulating your trades, manipulating your lot sizing, getting a flow of the market. I don't like the way how gold is trading. So I hope that makes sense, guys. Okay, so and if you guys are in buys too, okay, so you see now we're coming right back down. So this level, I didn't like the static zone. This box, I never changed the size or the box. I just changed the color. It used to be red for resistance, but we closed above and we retested it, so that's why I flipped it green. Okay, and we're going to see if it can hold. Maybe if it breaks, then we're going to continue to come back down into here. Let's take a look at GJ. Okay, so GJ, guys, see how GJ, it's getting overbought up here. I know a lot of you guys trade with RSI. I have it on my chart too. We are completely overbought up here. It's at 81, 82 on RSI. So let's look for maybe like a double top up here. Okay, that's our first top. It came up here. So it came up. Maybe we see it come back down. So this box, we have to flip green again, okay, for GJ. And maybe we see if it closes below here, this is when it could sell off. Okay, we are in an overbought condition. Maybe we see it come back down, maybe a double top. Like what I'm talking about is it came up here, back down, maybe it will come back up again, then it gets rejected with more volume. We break, we close below, we retest this, we flip it red, and then all of a sudden GJ is coming down into here. Okay, so we can wait for it right now. We don't need to rush into a trade. We can wait for it to come to us. Maybe place an alert on your chart at this level. Okay, so I'm going to place an alert at this yellow line just in case it comes down here and we're on another chart. It will update us. Okay, so I will be looking for maybe a potential sell for GJ below here. Okay, gold, guys. Don't ask me to trade gold. I hate this thing. I hate it with a passion. I like buying physical gold. It's easier. You buy some physical gold, you put it in a safety deposit box and you leave it, and you just leave it for years and years and years. I used to scalp gold a lot on the 1 minute candles, but kind of moved away from it when I love the way how indices move. Okay, guys, do you guys have any questions in the Zoom? Do you guys have any questions about the trades that I took? Any questions? Okay, the gold was straightforward. We went in a buy. It went up 5-10 pips, not enough. Came in, back down. I got out at a break even. I just don't like it. Will it build? Maybe, and continue to go. It might take a while for it to build. Do I want to continue to hold it and find out? Maybe not. Maybe I still would have been holding it, but when we benefited from the US 30 trade, I kind of don't want to get up at 2:30 in the morning and give away a lot of the profits, 'cause for some of us it's really early in the morning to get up, so we have to be very conservative of our profits too and protect them, because it is very early hours for some of us here. But also US 30, guys. Okay, remember this candle at 350, I said wait. no candle close above. 355, it was right before 4 a.m. I said I'm going to wait, came back down. 4 a.m. came back up, came down, inverted hammer. 405 came right here, and this was the first candle that kind of closed, and then I started to buy this candle, and then we benefited on the 415 candle. It was that ignited bar that broke the wick like a firecracker, and then we caught that big candle coming all the way up here. Oil is very choppy too. I would stay away from oil and gold maybe right now for London session. Oil, you guys see trades better in going into New York because we have OPEC at around 7 a.m. Gold has COMEX around 7:20 a.m. So there's a lot of things that happen with gold and oil in New York session. London is pretty choppy sometimes. See, guys, why I got out at break even? Because my stop loss was originally down here. So if I stayed in the market, now I'm waiting like a sitting duck, waiting for my stop loss to get hunted. So I kind of don't want to play that game with market makers. I see that when we got rejected up there, we got rejected heavy. Then it came up again and got rejected. So then I closed the trade at a break even. Don't like it, don't like the setup, and then review for another trade. And oil is still bearish, okay? Believe it or not, it's still bearish. We're flagging. I know it's getting real choppy. The candles are getting real dicey down here, a lot of indecision, but we're still below this area. It's still below the trend line. It can continue to break down. GJ is still very strong. Would I recommend buying the highs? No, okay? When something is completely overbought, like when, I know I don't use this RSI indicator a lot, but when something is at 80, 82, 85, and if you continue to buy, you know that you're buying the highs and eventually maybe it's going to come down. So it's kind of, you're kind of risking, it's not the best quality setup. It's kind of that FOMO, fear of missing out. We got to buy, but you got to remember you're buying the extreme highs, and you could be buying into a lot of supply or a lot of offers, and they're waiting to absorb your liquidity because they're waiting to punch it down. So you just have to be careful. Sometimes if you miss a trade and it's gone, we missed it. The train left the station. We can wait for another ride at another time. But don't get in a habit of buying highs, guys, especially if it's overbought, okay? It's just a rule that you should have as a trader. Okay, and if you don't take any profit out of these moves, this is the pullbacks that can happen. Okay, so going forward, if US 30 closes kind of below the breakout area, maybe we can look for a sell below here. Okay, if it comes back down here and it holds, maybe we buy this green box. Maybe this is the pullback where we can get in again at a discount. So we had the breakout up there, coming back down. Maybe we come back down here, and instead of selling, we buy, and then it bounces right back up. Okay, maybe if it comes back up and it closes above here, we can look for that continuation. So now that I'm not in a trade, what I do is I just adjust my charts. Okay, so now I look for something maybe above there. We're below this green box now. So now remember, we had it green. Now we're below it. So the same box, I just flip it red. Okay, to represent a resistance zone or supply. If we can come back and close above here, then maybe I'll look for a buy. If it consolidates from red to green, maybe I don't trade this range, and maybe I see how it reacts maybe below here or above here. If it's trading in here, I just let it accumulate. Okay, if we're in and out of a trade, maybe we just got to wait patiently for another trade. Thank you guys, almost 300 viewers for London. I didn't think we would get a lot of you guys on London. That's why I say hit the notification bell. Make sure you guys have that, because sometimes we come unexpected on London from time to time, and some of you guys that have that notification bell, you guys get updated and you don't have to miss out on a session. So thank you guys, and thank you guys for the subscribes, the likes, everything. Thank you guys. Guys, I'm enjoying this session because I'm eating a chocolate chip cookie and I've got some white milk. So I'm really enjoying this session. It's a little bit different from the New York session. I'm dipping my cookie in my milk. Okay, gold, guys. Okay, so that's where originally my stop loss was. If I left it there, I would have taken a loss. So, guys, I hope you guys understand why I got out at a break even. I know it sucks. But I always tell all the guys in Zoom, not breakout trades, break even trades, you can look at them as a positive. Don't look at them as a negative. I didn't win any money, I didn't lose any money. So, it didn't cost me anything. But it was a good at that situation. It was good to get out at a break even because I saved myself a loss. Okay, so I look at the positives. Okay, I don't look at, oh, I just got out at a break even. I saved myself a stop loss hit, and even if I got out at break even and it ended up going up bullish, I don't play the woulda, shoulda, coulda game, because now when I look at it, I made the right move getting out at break even. But if I didn't and then it ended up going bullish, I'd still be happy with my decision. Okay, as a trader, you got to kind of have your mindset set and not think about trades. Just react at the present time, and don't worry what happens after that. Be confident with your decision that you do in the markets. If gold breaks below, we're right at that 200, Noor. So you have to be very careful, because gold, what it could do is fake out, come down here, pick up liquidity, and go back up. If you're going to continue to trade gold, guys, okay, I'm not going to continue trading gold, but if you guys are, okay, just with the structure that's already been built, okay, so if gold comes back, Noor, above 1982, like above here, closes above, retest this, you flip this box green, we might continue to get a breakout on gold and test that high of the day up here at 1985. We couldn't get it on our move. It ran up about 10 pips, but didn't really give us that big move. If gold closes below here, yeah, you could look to short, but it could just break down here for a few pips and come right back up. See, like here where it broke, tested here, and came right back up. We're right near that 200 EMA. So I would just look for gold to break below this level for potential sell, because when you're playing inside here, it's too choppy, in my opinion. But this area, you can change this to green, because we're still holding here. So I tend to look for like kind of patterns, what's developing now. Here's like maybe a left shoulder. Here's the head that broke out where we were in buys. Now we're right back in the right shoulder. So yeah, it might break down here. Look for a retest there, a rejection, and maybe we shoot down to here. And then when it comes down here, it could quite possibly bounce and come right back up. So those are levels for gold. Again, guys, maybe stay away from gold. I know we want to trade gold, but there's better securities than gold, guys. Okay, oil is still breaking down. If you guys are holding your oil sell, like when you get in a sell, maybe your stop loss is above here. Now it's still moving down. Okay, I never took oil. I was asking some of you guys if you guys did. I know some of you guys are still holding your sell. It's real choppy, but it's still breaking down. And now our indices are coming right back down to maybe possibly where it all began. So that's why, guys, I don't get greedy. Like that move from where we bought it right here, the top of the move was approximately 60 pips. If you do not take any profit, look at where it comes down to, right exactly where we bought in. So I know it sucks to give away 60 pips or 50, and then it comes back down to break even. That's why sometimes at the highs, either close your entire trade or close out 50, 60, 70, 80%. We tell you guys this all the time. Close out 80% up there. Leave 20% running with a break even. So if it comes back down, only 20% of your runner gets tapped out. You still secured 80% of the profit up there. Okay, remember, guys, this is scalping the markets. Like, I'm not looking to buy this trade and hold this going into New York and to the end of the day. Okay, I'm just looking to hold this trade maybe for 5, 10, 15, 20 minutes and get out. Okay, remember, we're scalping the markets. So I have a different mindset than most traders. Some traders are looking to take a buy and hold it all day. It's nice if we can, but it's got a high probability it's going to come back to retest the breakout. Okay, so you see what goes up can come right back down. US DAX came into the supply area. See the big red box? Came down, back up, down. So it's kind of like a double top as well on DAX, where it came up here, back down. There's our neckline, came back up, our double top, and then now the candle is breaking. Potentially going to come back down to test, maybe. So what I do is I just adjust. Okay, this box I bring across. The volume is above us, so I just flip it to a green box. And then maybe, see how it just came down to the 9 EMA? So we're holding the 9 EMA right here. So maybe it's going to come back up. If DAX closes below here, then maybe we look for a short position below here. Maybe it comes back down, test the 200 EMA and the daily yellow line. See how it's kind of lined up perfectly? If we can't hold there, then we'll come back down to this range right over here. And I kind of wait for the move to come to me. Maybe if I'm looking for a continued buy on DAX, maybe something above once we clear this big supply area, then we'll have a nice breakout above there. Okay, and then if you're not in a trade, I suggest you get milk and cookies and you just dip them in the milk and you eat them while you're waiting. If you're not fasting. I got to remember that some of you guys are fasting on the other side of the world now. I'm going to make some pancakes. GJ is still bullish. Okay, GJ is still running. Okay, it's still holding. But place an alert here, guys, if you can, around 165.44. In case this thing pulls back. I know sometimes after we end the calls, guys, you guys know on the Zoom, sometimes when we end the calls, like around 5 a.m., 5:15, that's when moves start to happen in the market because it's leading into the pre-market for equities around 6 a.m. But if GJ breaks down, we're looking for it down here. I believe it's going to break down. I don't think this thing is going to go up forever. You can start to see like the divergence here. If we draw like a red box here, okay, so when it's coming up to these 80s on RSI, it is completely overbought up there, but we just got to wait for this pound to kind of get a little weaker. Right now it's very, very strong. Okay, so big rejection right here at this green box. So let's see if it comes right back up, maybe close above here. Maybe we'll get that continuation move. GU sell maybe. Yeah, we mix it up, guys. I always mix it up. I normally look at GU. Normally every day we switch it up. One London session we were looking at GU. The next London session we were looking at EU. Today we're looking at GJ. I don't normally do NASDAQ when we do London. I like to do US 30 and DAX, and then we always do gold and oil as well. So kind of mix it up. Then when I do New York, I do US 30 and NASDAQ. I don't do DAX. And then we always do gold and oil because that's what everyone loves to trade. But when everyone asks me, Ron, what are you trading when you're trading? I'm on US 30, guys. All day, every day, one chart. I have it like kind of side by side with a liquidity platform showing the bids and the asks in the market, showing the depth of market. And then I just watch those two simultaneously. Maybe on another monitor I also watch the US dollar DXY to see anything you're trading, anything, any security. You always want to monitor the US dollar because the US dollar is kind of a market mover in itself. And if you guys are kind of preparing yourself for the next 3 months, 6 months, year or 2 years, you can see that the US dollar is overinflated. A lot of countries are going against the US dollar. They're kind of moving away from it. They're trying to make their own reserve currencies backed by gold. So in the next few years, guys, like we are trading through history. I hope you guys are really appreciating the time you're trading. It's not the easiest time to be a trader or to learn right now because this is historic times. I remember when I was trading in early 2000s, 2007 and 9, through all of those financial crisis, I was learning a lot about the markets, and I keep telling you're going to learn more about the markets in the next coming months and years. You know, we're trading through history right now, so So how many times have you seen financial banks collapse and you're trading through these markets? So every single day is a learning day in the markets. Doesn't matter if you've been trading for 1 year, 10 years, or 20 years. You always want to be a student to the game. Once your ego starts getting and you think you own these markets, that's when you're going to get punished. These financial markets are ruthless. They will take everything away from you, you know. So just trade careful. Number one thing is risk management when you're trading, guys. Try not to over leverage your accounts. Try to get in a trade where you're comfortable, okay? Like what I mean is you can get comfortable in a trade, you can eat some cookies and milk without panicking, okay? You can talk with your friends when you get in a trade. You can trade with a group of people. That means you're trading in a comfortable lot size. If you're trading and you're panicking and you're just staring at your MT4 and you're sweating when you go down 10 pips in drawdown, I'm telling you that you are over leveraging your account and you need to really look at your sizing. Try and look for the best quality setups if you can. Like right now, see how DAX is now getting real choppy? Green, red, green, red. This is called consolidation right now. So the market has no direction right now. So this is where you have to be extra patient. You got to wait for the next move. This is where a lot of traders get really frustrated. They're buying, they're selling, they're hedging, and they're over leveraging, and then a lot of nothing good comes out of this. So we have to be extra patient as retail traders. You got 20 days for your challenge. You need to make up 8,000. You still have a lot of time, but you need to manage your next 20 days. So break that down. 20 days divided by 8,000, you'll get your percent or your dollar figure, what you need to do minimum per day. And that's what you need to do. And then another thing is, I'm not sure which prop firm you have, but with MFF, if you get to break even, then you can apply for another free challenge. So that's another thing. Maybe that could be your goal. If you get in so much drawdown, maybe your next goal is just to get to break even in the allotted days, and then wait and apply to do it again, and then you get a restart. I'm not sure if that's with most brokers, or sorry, prop firms, but I know MFF offers that for phase one. So if you're in drawdown and you can't finish it, try and get to break even minimum, and then you get a free trial. And then what I would do before you start your free trial again is go over your trades. How did you get into 8,000 drawdown? Review your trades, learn from it. If you don't learn from anything, it doesn't matter how many accounts you try. You possibly lose all of them, okay? Okay, so gold came down here. Okay, stop loss raid down here. This is where most stops are at the daily. Okay, 1980 came down and then right back up. So again, if we're trading gold, we'll watch for it above here. If we're looking to sell gold now, Noor, you know when I was saying watch now. Okay, so we came down here and bounced, but if we ever come back down now and we close below now the 200, maybe now we look to sell below here. Okay, so inside here, if it's going to consolidate in here, guys, let it consolidate. Okay, remember what I was saying, maybe a head and shoulder pattern. Okay, so maybe we trap it inside here. Now that we came down here, we poked our head down here, but nothing kind of closed below there. Maybe now that it comes up and it gets rejected and picks up more offers, then it comes down with more supply volume, and then we close below here. This is where we could look to short it down back below here. Okay, so I know I hate gold too, Noor. It sucks, but you know, we still have levels. If you still want to trade it, look above here for buys, guys, 1982, and let's look for 1980 or below for sells. Inside here, don't trade this. Oil is breaking down. Okay, maybe we should have got into an oil sell and held oil. You know, the woulda, shoulda, couldas. It's breaking down. Pull back to the red box. Rejected. Shooting star candle closed below all of this structure. Now we break the daily and the trend line, and oil is continuing to drop. Okay, I know some of you guys got in the oil sell. Congratulations to you guys that took that. Okay, and GJ, okay, now we're barcoding green, red, green, red. If you kind of want to get, maybe test out an early sell, maybe below here. Okay, this is where like position sizing, what I would do is I would go a little like test sell. If it kind of closes below here and retest this, test sell. And then if it closes below this area, this is, and then it gets rejected, this is where I go a bigger size down in here. That's just how I trade. I test it at the top with a smaller sell, like an just a small tester size. And then if it breaks this daily level, that's the critical level, then this is where maybe I increase my position and I take advantage of the bigger sell down here. Okay, so that's just me, how I trade. Test it out for a possible sell here, and then a little bit bigger position below here. And currently in the market, we've got US 30, okay, consolidating. Okay, look at over here where it was consolidating. Bring this across. Again, we're consolidating in here, possibly going into 5 a.m. Okay, but we got levels. If you guys are going to trade after 5 a.m., if it closes above here, we took out the highs. Okay, it came up here. The bulls were in control, but it came up here and found some offers and then continued to push down. If we come back above here and close above, we might break for a new higher high. Maybe we look for buys. If it closes below here, we might push, and then we lose this point of control, this demand area, and maybe we lose our 200 EMA, and then it's going to start drop down in here. If you're trading DAX, maybe a possible sell below this level, buys above this supply area. If you want to get rid of this red box now and kind of clean it up, what we can look for is previous high right up here. See those candles where they came up there? Kind of came into today's high. Okay, so now this big red box, if you want to get rid of it now, since we're trading inside of it, what I would do now is place like a smaller red box at these wicks right here. And then we know where our supply is currently in the market. And if DAX continues to maybe close like above here, maybe you can continue with the bullish momentum and take it up to that daily and see if it can break out of there. Yeah, have a great day, Noor. Go grab your coffee. Enjoy it. Yeah, I'm going to go for about 5 more minutes, guys, and then I'm going to go make some breakfast for myself too, because I got to get some food in me before, because I have about 40 minutes and then the sun comes up, so I do got to get some food in me. I hope you guys enjoyed this bonus session. We don't normally do this, but Dave can't make New York today, and I can't, unfortunately. I was going to do it, but I got called in. I got to go to the doctor again with my daughter, so that's during New York hours at 8 a.m. So unfortunately, that's why we did this bonus session for you guys on YouTube. Thanks for joining. I appreciate you guys for joining. Thank you guys for the likes and subscribes. Dave will be back for Wednesday, Thursday, and then I will be doing NFP with us for Friday. Okay, that's going to be the schedule going forward, and Dave will let you guys know for Easter Monday. I think he said he might be doing some back testing or something like that with you guys. But Monday is going to be a really, really slow day in the markets, guys. Even in London session, we'll have the Scalper Pro going, but it's going to be a very choppy session for Monday. So if you guys are in Europe and you guys want to take your day off, take it off on Monday, guys. It's Easter. You don't need to be trading 5 days a week, guys, especially when the banks are closed. Because when the banks are closed, okay, I hope you guys understand, when banks are closed, there's less volume in the market. With less volume, we get more chop, and also your brokers have high spreads. Okay, so that's another thing. When there's less volume, your spreads are higher. So it's like you can't win in a situation like that. So even if we want to trade, our brokers have high spreads. So when you're normally used to lower spreads, the spreads are going to be changing a lot with low volume. So it kind of sucks to trade those days. Okay, guys, and if you're going to continue to trade the rest of the day, just be careful, okay? Remember, if you're trading New York Okay, let's just go through New York, what we have over here, just to give you guys heads up. Tuesday. Okay, so for New York, remember, we don't have much going into New York until 10 a.m. Then we got the JOLTS job openings, red folder. Okay, for the USD, you can see that they're already forecasting less than the previous 10.82 million, and their forecast is 10.49. We'll see what the actual numbers are, and then the rest of the day we don't have too much going on. Okay, and in the Asian session, if you guys are going to trade NZD, there's 3 NZD AUD folders, red folders. A lot of traders do like to trade those folders there as well. Okay, so that's going to be the lineup for the rest of the day. Just careful when you're trading. Right now the market is trading sideways. It's probably going to move at 5 a.m. So again, if you're trading US 30, look for something above here, look for something below here, buy above here, sell below here. DAX, we can look for a buy, continue. If it, not just an impulse, okay? Remember what I'm saying. If it breaks, we close above, we retest this and move off of this, then maybe we can push up for a new higher high. But don't just always get caught in impulse trades, because it might break out green and get rejected and come back and close below here and push down. And then maybe a possible sell. If you really want to get this really, really tight, okay, what you could do is 50% of this green candle is like right around there. Okay, if you really want to trap this, and you're like a super scalper and you're looking for those big move, like those faster moves, you could look to start to short the market from here to there. And if you measure the move, sometimes during New York this is a bigger move, but right now in London that's about 13-14 pip zone, okay, minus maybe 1 or 2 pip spread. If you're looking for 10 pips, could be a break from right there to there. If it can't hold here, then you're looking for maybe a 20 pip drop. Right now it's kind of flagging in here. If you don't feel comfortable taking that trade, if it's too tight there, then keep it below that level right there. Let's look at gold. Okay, so gold still inside here, could be this ugly head and shoulder pattern. Left shoulder, the head that broke out, right shoulder, looking for a breakdown here. Here's the 9 EMA 200, could be getting ready for a death cross coming soon at 5:30 a.m. where it breaks down, retest, and maybe we're going to push down on gold down into here. Oil broke down. Okay, so if you guys were in oil sells, congrats to you guys that took oil sells. Nice move coming down there. And let's just look at GJ. Wow, GJ is still a bull. Okay, so it came down, back up bullish. Okay, just if you're not in buys, let it continue to go. Maybe it's going to hit a daily range and then get rejected at 5 a.m. Look for sells below here. Still no volume close below with a retest. So continue to watch this area. Okay, guys, that's it for me. Thank you guys so much. Thanks, guys, everyone on Zoom. I appreciate all of you guys. Have a good day today trading. Please watch your risk management. Guys in Zoom, the SST Scalper Pro will be going, sending out signals for you guys. And Dave has a day off. Okay, so sorry about London, or sorry about New York. And guys on YouTube, thanks guys for joining. I appreciate you guys. Thank you guys. It was awesome trading with you guys. Have a good day, everybody. God bless everybody. And I will see you guys back on YouTube Friday for NFP. And everyone on Zoom, I will be back for Thursday London session. And our webinar on Wednesday. Okay, so have a good day, everybody. Hopefully you guys learned something. Hopefully you guys caught a few pips today, and trade careful the rest of the day and enjoy your day today. Thank you, guys. Have a good day, everyone. Thank you.
Hey guys, good morning.
Thanks, guys.
Welcome,
have a good day, everyone.
Welcome to the live session of Stocksnipertrading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Trading with a perfect broker is the key, which takes you one step ahead. At AAAFx, we have you covered. The future of Forex is zero commission. Here at AAAFx, we offer ultra-low commission, which starts at 99 cents per lot. Our account's spreads start from 0.0 pips. With account leverage up to 500x, and can have a minimum deposit of $100, with an additional 100% deposit bonus, regulated by HMC Greece. compliant with ESMA, EU, regulated with FSCA, South Africa. Nothing to lose, but something to gain. Trade with the world's most liquid market provider, AAAFx, recommended by Stocksnipertrading. To get started, use the affiliate link below.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stocksnipertrading, we have a recommended broker, that is, HankoTrade. With spreads as low as 0 pips and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.